Stock prices at an all-new high. Surprise. Well, it may be a surprise given the fluctuations we've seen since the whole coronavirus hit the tapes in late January. We've seen stocks sell off and rally and sell off and rally, and now we seem to have exceeded the recent sell-off, and now we're hitting uncharted waters. Even the S&Ps again on their all-time highs. And it just seems to me right now that equities are very optimistic that all the risks that we've seen, not only coronavirus related, growth related, whether you look at what's happening economically over in Europe, the long-standing ripple effects of what's happened in China, the equity markets just seem to keep brushing that off, continue to go higher, despite the fact yields are very low. There isn't a whole lot of alternatives, and stocks have been the one big outperformer of all asset classes in the last few years. So, of course, they will continue to be bullish until proven wrong, and today was no different. So we extended beyond what we had seen declines over the last day or so, and stocks continue to go higher. That bullish momentum back, so to speak, and market volatility. The VIX index, it's seen good days and bad days. Obviously, the big spike on the coronavirus epic. Then we came back off, but we didn't go down back to that sort of that 11 to 12 level, maybe even close to 10, where we have been sitting for so long. We're holding at just the mid 14s, which in all honesty remains elevated, I think, given the fact that we're on all-time highs. So maybe a little bit of option activity there, which we haven't seen in the past, given, I think, now that market buyers know how bad things can get, and if not worse. So I think right now the VIX index in the mid-14s probably could be a level we could see for quite a while. That would be well off the recent lows, certainly not on the highs or in the norms, but I think at this point, anything above that 10 to 11 level looks high, and that's kind of where we're sitting right now. So volatility a little elevated, although not high, as equities are on the all-time highs. And lastly, what do we have coming up? Part of the fueling of this equity rally today, some easing of the coronavirus, possibly seeing the end of its run here. Likewise, the PBOC looking to add some stimulus that will help get some of these Chinese companies off the ground after the recent demise due to the virus, and that could certainly be fueling stocks. Our Fed here suggesting that they're not going to be raising rates anytime soon. Another reason why stocks get fueled. And we've had some positive data. So I think a lot of reasons why stocks should be going higher here. The one question mark should remain, if stocks are going higher here and if everything looks to be fixed or getting better, why are treasuries remaining so stubbornly high and yields so stubbornly low? And I think part of that is the defensive edge again. As stocks go up, you need to have something to hedge it with. And obviously there's a huge global demand for yield, which we haven't seen. Obviously, other countries don't have the yield that we have here, and that could be attributing to lower yields as well. But ultimately, stocks right now continue to be the outperformer, will remain in a bullish trend. We know where we're wrong on down trades because we've seen sort of a base set during that whole coronavirus epic. And at this point right now, it's going to take more than just a global potential slowdown. You're going to have to actually see real global slowdowns, I think, or real effects that will get stocks to sort of pull back from these all-time highs. Because right now, I don't see any reason why equities would go down, especially with yields so low and sort of coming out of this epic crisis the way we have so quickly, and with central banks playing along and doing their part to stimulate asset prices. It looks like clearer skies ahead for equities and higher prices.